So here we got the 1 year chart, GOVX, daily candlesticks, clear downtrend, filled brief spikes that didn't hold. Got stuck under this 50 SMA, flushed to a 55-cent 52-week low before spiking all the way and testing this 200 SMA briefly above $3. So big move on big volume. Traded 165 million shares, then 160 million shares next day at the peak volume at the end of May 2022, right? And then in the next 2 months, we sold off all the way back down to around low 60 cents range before making this recent move, which we'll go over closer depths soon. But I want to paint a bigger picture before. So we spiked all the way from 62 cents to a higher high to nearly $4, and we hit a 449 high when we look closer. But let's look at the 2 year chart to see that we were a former COVID vaccination runner. So this is a low float stock that's ran on volume and induces extra FOMO because people remember that it ran above 300%, sold all the way off, and then here we are with more volume than this stock's ever seen. So we got to get on a closer view. We'll look at the 14-day chart, and we can see a clear uptrend that's been established. I've been opting out and trading TNXP because it feels less overextended. But today, this big dip brought me to it, and we bounced off this uptrend beautifully. Then they released earnings, spiked all the way to 360, and then here we are back down, closing at 254 in after hours on the earnings day. So right near back to this uptrend. The question to me is this going to hold, or are we going to head back down and test this 215 and 235 area before the next bounce? So let's go over what caused this first news spike actually. And it's pretty much Biden said the monkeypox was something that everyone should be concerned about, and they'd already been in the monkeypox and SARS vaccination game. So people remember that, brought the volume, and that's all it took. But it didn't hold. So what caused this most recent one was the World Health Care Organization, state of New York, and the state of California has since declared monkeypox an emergency. So everyone's jumping into these monkeypox names. The volume's taking it up. A lot of squeezes, I think, is going on, because it's really hard to find borrows on GOVX, and TNXP is easier to find, but still, you could tell a lot of people are jumping in short. So let's go over some of the closer viewpoints first. On the daily candlesticks, we saw the uptrend on the 14-day chart. So when we look at the Fibonacci retracement from the very bottom of this recent move to the very top of this 449, 50% retracement is 256, and here we are closing at the end of after hours at 254, 2 cents off of a perfect 50% retracement, which is usually how a big move pulls back before it makes its next move. It's also worth noting it has to go underneath, this 175, 165 area to make a lower low. But it also has to get over this 420, 450 area to make a higher high, which is going to be hard, I think. So let's look actually at the 7-day for, let's look at the 7 days for supports and resistance. So let's start off with 250. That's going to be the obvious one here. The top of this wick, bottom of this candle, temporarily the support here. So 250, we'll go above and we'll do the resistance. But you guys all know resistance becomes support, support becomes resistance. So these are going to change with the price, but these are all heavy price action points that are worth noting in my opinion. So 265, 285, $3, 326, and we'll go over why we're not doing 325, but 326. You can see the top of this wick, top of this candle, nearly the top of this action. This part right here got to the next one, 350. So above 326, 350. And then the obvious one of 375, So these algorithms like to work in 25-cent increments. So 25, and you can see it a lot. Just the psychological levels of the quarter levels between the dollars. So 75 cents. You can see the action of being support on all this, and then the $4 one, psychological level, as well as look the resistance of all this. And above that, where these candles broke out to, is where I'd say the next resistance, 420 to around 425. So you see 420 there. You could even maybe say 430. Just a little bit of action. It's going to be heavy because of the people that bought the top. So under 250, the next one I'm jumping straight to 235. If this breaks under 250, I'll try to load it for a bounce at 235. We saw a bounce here, and it's nearly the top of this action here. The top of this wick is 234, so 235. About underneath 235, I got 215 next. Resistance of all these candles right here. Temporarily the support here. $2 a clean psychological level. Resistance here, support here. So you can see how it was temporarily the resistance on this too, and then it became support when we broke over it. Now if we get back under it, it could act as support, as resistance again, or we could bounce off of it. That's how all these levels work. They're dynamic if you think like that. So 175, which is also the psychological level. There's going to be some heavy action between 185, 180-ish too, to worth noting. It's not going to just dump under 2, go straight to 175, but if it breaks under 2, I'll wait and try to at least start loading around 180-ish to 175. It's tight enough of a range. Under 175, I got 165. So you can see 175 was resistance here on this action, and then it was a bounce off here, here was support here, and then the parts that did flush were here and here, which were 165. So 165 under 175. Then we got the clear cut 150, where we got a bounce off this action here, this wick here, and the top of this wick, and it's the psychological level. Then underneath it, we'll go 135 and 125, the resistance here. So realistically, I'm wondering, do we test this 235 area to 215 area before we try the next bounce? Possibly go right underneath it, flush everyone underneath too. That's what I'm looking for, because I'm not going to hold this for a long term. This is a short term. The price ranges are too wide. You got to lock your profits. You got to manage your risk tight on a play like this with this much volume and the short squeezes going on in the market and on this stock lately. So let's go look all the way to the 5-day chart, because I got the warrants. So this is interesting play, because as I recorded, it's the afternoon. They just dropped their 10K and did their earnings. So on page 7 on the recent, actually let's see, warrants page 7. You can see all their warrants that are outstanding and their prices. So at 165 you see some, and then here's that level I was talking about earlier, 326. They got some that was you saw as resistance in the action, most likely because someone's offloading these warrants. So 365, 326, 165, $5 and $5.50. Those are the ones I managed to put on this chart, but there's also some that are at $6.87 and $13. I mean, that's kind of, I'm not going to talk about that. It's too far above the current price. So let's see. There's the 165, and you can see it being support. And then we got 326, as you can see, the resistance here. And then now we're struggling to stay above it. So that's what I'm wondering, if these warrants, which are only 3 million, which shouldn't be much compared to the volume that's been going on. We should have ate right through them, you'd think. And then here's the $5 level, and then the $5.50. So I did the resistance from the 420 to 430-ish range, and then we'll just say that's the next one, $5 to $5.50 on the warrants. So now let's go over the fact that they just reported a $2.2 million loss compared to a $1.3 million loss same quarter last year. So that's not positive. More importantly, I'd say they have $31 million. So at this rate, they're burning they'll say 2.2 million around. We'll just round up and say 10 million a year. They got 3 years of burn rate 3 years at this burn rate. So the problem is they have no revenue, and we can see as we look back at all the annuals on Yahoo, the revenue is very minimal because it's pretty much grants and whatnot. So they've lost actually more money in 2021 and this year than they had in 2020 and 2019 and 2018 before they ran with the COVID and now the monkeypox. So it's one of those plays where these moves doesn't change it fundamentally necessarily. They're still losing money. Still very fun. It's very speculative, high risk. Unless the best scenario would be a buyout. Shorts would get destroyed because of the low share count, which we'll go over. Let's look at their 14K. So it's also worth noting they have no zero split. So we're not looking at a reverse split adjusted chart as we go over these charts. So we went over their warrants. Let's go over their very beginning. It says as of August 3rd, they have 24.7 million shares that were issued and outstanding. So if they have $30 million, $24 shares, they're trading above cash value with no revenue. Just a pipeline. So more importantly, we go to page 1, and here's what scares me the most. They have an authorized share count of 600 million, and it says they're issued is 16.2 million as of June 13th. As of June 30th of 2020, and outstanding shares as of December 31st, 2021. So these could be actually a lot more than I suspect. We'll see in their next 10K with all this recent volume. There's been a lot of dilution. And with 600 million authorized share count, I suspect they're going to do more. They have a lot of room to do more into any strength. So I wouldn't put big money into this and hold. It would be nice if some company came and bought them out, but the chances are too low. But on the flip side, you can't short this because of the low share count. If it did, it could squeeze up so much it could wreck you with just one trade. Even if you're not in that big, if it ran 800, 900% or something overnight. So the next interesting page, we went over the warrants and we went on the share count and the cash. Page 14 on their recent 10K. Let's see. No, page 13. Where it clearly states we have no products approved for commercial for sale. We do not expect to generate any meaningful revenue unless and until we obtain regulatory approval and commercialize our product candidates. So they have no revenue. They've accumulated a deficit of approximately 69 million and expect to incur operating losses and generate negative cash flows from operations for the foreseeable futures. We have funded our operations to date primarily from the sales of our equity securities and from government grants and clinical trial assistance. So they're saying right here, they expect negative cash flows from operations for the foreseeable futures. So there's going to be more dilution. There's going to be 42Bs dropping. Don't get caught with your pants down.